Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, March 22nd, 2022. What we're going to cover is a quick update on the broad markets. I want to do an update on crude again. We'll maybe throw in lumber, covered it yesterday, and then a couple individual trade ideas. I'll do updates on the ag input stocks, a couple that have highlighted recently, MBII, RKDA, and we'll also take a look at some of the cannabis stocks. I highlighted those about a week or so ago. So starting out with QQQ, we took out that 252 level, and it wasn't just 252. That's where I let them pop my stops right here. As this morning we popped above 252 and the fib, the key one of the key fib levels. Let me try to pull that up. I think I've got it here somewhere. Yeah, the 352. I'm sorry, 352 came in right with that 38.2 fib. That's a pretty significant fib. That's from the entire move down off the high. Remember the Nasdaq 100 peak back in November, and that was resistance. We had a couple reactions there. That's where I mentioned on Friday take an objective short, but since they popped it. And we're probably going to get that scenario I talked about with the the divergent high. We've got on the let me flip boards again, going back to the 60-minute chart here. You have the PPO up at levels where it's capped all advances in recent months. But remember, also recent months was a strong downtrend. We were in this time around. We just recently broke out of the bullish falling wedge, and they've been buying it up since. We did have a pullback off resistance there, but it fell shy of my target. So I'll be back in this one probably today and probably by the time the video is over, because I think they're going to make a run. They're going to put in that divergent high I talked about. That right now, technically, we do have negative divergence. We have lower lows. We could just push up a little more. Just want to show you my next resistance right here is at about 356.81. Let me take a look at those fibs too, see where the next one comes in at. Next fib is the 50%, but we can also do fib clusters. Fib clusters, you look for key reaction highs along the way. You can play around with it, see which ones line up. And I'm sure you could come up with some other fibs. But as far as price resistance, there's not a lot until that point there. And there's also a thin zone here on the price histogram. So as of now, let those go. We're probably going to see a little more upside in QQQ, but I wanted to show you a couple things here. This is the daily chart. We'll turn off all the lines, and you can see they're making a run at. This is the 200-day exponential moving average right here in red. I think you can see it, and if you can't, I'm going to turn it up for you. And then above that, you have the 200-day simple moving average, which between one of those usually does a trick. And again, they do a good job of acting as support and resistance in bull trends, support, and in a bear trend, it's resistance. So we clearly took them out. And again, by the time we get there, we're coming up on that 200 exponential, and we'll have, we should have that divergence there on the 60-minute chart. Remember, we're still coming off a big divergent low on the daily chart, and so far the divergences are playing out. So some room to go. Now, on the flip side, what I did is it's not called a hedge, whatever you want, but as I covered those shorts on the Qs, I turned around and shorted RTY. RTY is back to that golden shorting opportunity level, about 208.50, which again is the bottom of this year-long trading range right here. So you had a sell signal when it broke right there, and a nice trade to be made. That's when all the indexes hit my first targets right there. And so we went long, bounced, came down, we tested again, and like everything else, every index in just about every sector except the financials put in divergence on the daily chart, and those divergences are playing out. However, you also had a lot of things roll over on the long-term chart. So it's a question of, do they play out for new highs? At best, still, I would think marginal new highs based on the long-term charts, the weekly charts, not to mention the macro, the fundamentals in the economy right now with the rate hikes and all that, and crude oil, what it's doing. However, we're not. Let's talk day by day, minute by minute here. That would be weeks and months out. Most likely, if it even happens. I don't think we're going to get there. We still have a mountain of overhead resistance, and I still think those targets on the weekly charts will be hit. And again, so you have IWM here at big resistance, and it's as simple as that. You've got the 200, so I'll give it a little bit of room, but not too much. I think a nice risk reward here. Here, let me look at the weekly chart and show you. So you're at that 209. Here on the weekly, it's 209.23 again. It's a different chart. It's just where it lines up. So call it 209. And so if my next target's hit, which I still believe it will, that's a 19, almost a 19% drop. So in that case, if you gave yourself even a 5% stop loss, 5% will be way up here in the middle of the zone. And that quite often when I see a trading range like this, you could put a line in the middle, and that line will act as support when you're above it. See all these candles? Look at the bodies, the fat part, not that skinny part. These are weekly candles. That acts as support. Once you break it and there's a solid first close below, then you go to visit the bottom of the channel. And so you either trade above or below, and that would align up with that somewhat. So you could have a 5% stop, and that would still give you an excellent 4-to-1 risk-reward ratio. Just got to give it a little room right now. It's hard. I told you I kind of lightened up in recent days on my positioning on the equity indexes, because just the near term is not as clear at this point in time how much longer this counter, what I believe to be a counter trend bounce, is going to play out. But like I said, near term, that Q's popped that level. However, I don't think that's we're getting there close to where I think we're going to go before the next tradable pullback. That last pullback, I mean, it was tradable if you took quick profits, but it didn't fall. I still think we're going to come back down here. And again, it looks like this now. Here, I'll put it here. Negative divergence right there. And so that's probably about it. Like I said, it would be nice if there was a better resistance level, but I'm going to add one right now. I'm going to look at these previous reaction highs right here. 1, 2, reaction there, and reaction high right there, and that might do the trick. Yeah, okay. All right, so I paused it, just fired off some NQs, got back in the NQ shorts. I think that will most likely cap it today, or close to it, so I'll give that one a little bit of room. We'll see what happens. Charts are dynamic. I'll probably do a wrap back around to the indexes here at the end of the video. So that's it. You have the indexes approaching the 200 days. You have the SPY, it's SPY, S&P 500 right on a hair above the 200-day exponential. I'm sorry, the simple, the blue line right there. Here we can see it better on the weekly chart. And big resistance overhead. This was that top. That was the big level. That was the what confirmed my longer term downside targets when this red candle happened. When we broke this support back here, you had an all-time high in the S&P 500. You broke out. You back tested it several times for a few weeks, about a month or so. Looked like the market was going to new highs and beyond. Made a marginal new high, which was a divergent high, followed by a sell signal, followed by a back test with 2 rejections, and that's it. We hit the first target there, and this proved to be support afterwards. That's 415.51, and also my near term, near term T2 is down here. So that was just support. We came halfway down to my second target and then started defending this area. So that's what needs to go right now, that yellow line, 415.51. And ideally for the T2 to get hit, I'd like to see us get rejected on a weekly. This is a weekly chart. Doesn't matter what happens right now, intra-week. We're a hair above that. I want to see us close either on or back below that 200-day and or that 451-ish level that's just above it. Anything much more than that, for the S&P 500 is bullish, and then you still have the leading index back here, which is still way, way below these levels. It would take a heck of a run this week to even test the 200-day simple on QQQ, and then even more to test that big 379 level. That's that comparable support that I just showed you on SPY. You had the all-time high right there, breakout candle, 1, 2, 3, 4. We didn't test it that week, 5, but that's 6 weeks, 7 weeks actually of back testing that level. And when it gave up the ghost, boom, it was a big, big level. So that is a super big level, important, very significant to me. And it could easily, we could easily head up there and still go on to hit those targets. That's why it's not clear to me what happens if we've got a few more weeks, even a couple months left before the next major leg down or not. Right now, near-term trend is bullish, but like I said, you got that nice shorting up right now on IWM if for those interested, and I would favor that right now. There's just the momentum in QQQ is a little strong. The divergences were better in QQQ, and again, that's just right now favoring an IWM short as far as the indexes go. And by the way, that could either be for IWM or RTY, the small cap futures, or M2K, the mini futures. That could either be a quick pullback trade off that resistance level, or what I'm planning it to be right now. I took a very small starter position in RTY, is to add to it if. Sorry, hit the pause button. If we do get rejected right here and start to roll over, and then QQQ, let's say, puts in that divergent high soon and rolls over as well, then you'll be watching for a break of the recent lows. Roughly 192. You have a couple lows right there below it. All right, so let's move on. Let me show you some other things. I told you I had to update crude oil. I definitely want to do that. Crude oil, this is a 60-minute chart, 1 hour candle, but we're only going back a month. There's been so much volatility, I don't need to go back much more than that. We had this bullish falling wedge, which gave us a objective long entry recently, and the back test of the trend line. So it was multiple entries here. We milked that for a good trade. Covered the shorts a little too soon. I'm sorry, the long position a little too soon. I was originally targeting this level right here. Of course, we're back on the previous contracts, the April contracts then. This is the May contract we've since rolled. So we went a little bit beyond that, but as I mentioned, we have nice resistance here. 1, 2 major reaction highs because we had a big gap there. It was back tested. And then once we back tested again, a few candles, and once that level failed to hold, you can see it was a waterfall type selling. So that is very significant resistance, 112.52. And we got rejected off there so far, and then we went on to trigger an additional sell signal and break of this near-term uptrend line. So came down, hit that. That was, remember, my former target there. Resistance, once broken, becomes support. Here, I'll show you closer. We bounced on it. There's divergence lines needed to be extended. We bounced on it. Boom, on the initial tag of that 107 level. Bounce back up, hit that 111.06. These are lines I already had here. Boom, reversed. And now at this point in time, need to take this out. Boom, boom. And if so, we'll probably get some more downside in crude oil. And I think it'll come because that's the 60-minute chart. Let me show you the 5-minute chart, what it looks like. 1 week, 5-minute candles. I told you this is a nice one to trade if you're actively trading. Here's that uptrend line. You can see it right there. Beautiful little divergent high, negative divergence on the indicators, and you hit the resistance on that bigger, more significant 60-minute chart. Reverse, broke the trend line, hit support, boom, back tested, gave you another objective shorting up right here. Circle that or arrow it right there. Reject it, and now boom, we just need to break 107, roughly 107.82, or the recent lows. Call it, well, there's so much volatility, call that about 107.50. I think needs to go, and if and when that goes, it should take us down here somewhere along the lines of about 103. You get a little reaction there. You've really got a support zone in this whole area right here. That would be where we're likely going. And another good day in our lumber short. We had this bearish rising wedge. It was given first as a setup. Then the entry was triggered there on the breakdown. We hit my first, second, third target. Had a reversal off the third target all the way back to the first target. Support, once broken, becomes resistance. Provide another objective short, and boom. So far this one's good for, right now, about a 20% gain on the short from the original entry. And you're coming up on my next target at about 122 right there. 1022. 1022 with the potential for a bigger drop. I probably should add in here, and I'm going to do it now because I see a potential support level that may come into play right about there, give or take about 900 or so. So that is another potential target, and this is really where I think we might end up going before all said and done on this drop, about 825. But at this point, you start to get the odds increasing for a bounce. At least now you have some potential divergence here. They're about to take out the divergence. If we go much lower, we do have divergence. You can see that 0%. That means that's a flat line. You have equal lows in the RSI versus lower lows in price. That is positive divergence on the RSI, and it's certainly positive divergence there. Higher lows on the PPO. So should we reverse here off that 122 support slash target, you will have divergence, and that could lead to a much bigger rally. But if we can take this out, you know, how you trade, it's up to you. You can scale out if you have multiple contracts, take some profits, or lower stops. Just remember, this one doesn't trade around the clock like the rest of them. This one just trades regular hours, like almost like the stock market. And so whatever you take home today is what you have until tomorrow. And that's why the chart is so gappy. You have all these gaps because of the trades, how crude, lumber trades. Okay, quick update on those ag input stocks, MBII. Nothing much to update. There was a breakout here. The entry was triggered on any break above 85 cents. So 60 gapped up. So officially the entry is on the gap opening price, which was right here at the bottom of that candle. And so far so good. It's consolidated for a couple days around the first target zone towards the top of it. And so far it's good for about a 27 to almost 28% gain from where we entered that. And as long as it holds up T1, you can see these 200 days turning up here. As long as it holds up below the bottom of T1, that's where a stop I think is logical, just above that $1 level right there. Little, you know, around 99, 98 cents. Should hold that level on a pullback. Otherwise, we may just continue up to T2, and that remains a final target. And if you're very bullish on the sector or the stock, then you may want to just, instead of taking full profits there, just raise your stops and let it run. Try to see if you can hit that 194 potential target. But right now, that's I'd be happy just to take my money and run at 133. A couple pennies shy there is where my limit orders are set. The other one that I like, you know, I call these the second, third tier, lower tier companies, is RKDA. That one. Covered in recent videos, been flagging around the trend line right there, the downtrend line, primary downtrend line, and said last week when I did the video, it was like a week today, said you want to see it, it's holding this level, but you want to see it start to move away from there on volume, and you can see that candle yesterday was increased volume, so we did see some pretty decent volume on it, above average, and closed well above the line, so nice follow through today, up another 9%. First target still 189 with a second and final target at this time right under this resistance zone. The bottom of that's 238, tops 245. So you might want to, either raise your stops, let it run up that point, or just set a hard sell limit order right under 238. That's what I did, because you can see that's pretty significant resistance right there. So even if it can clear that level, you'll probably get a reaction there at the minimum. And again, or that could be the end of the run if we get there even. So let's see, first things first, but right now looking good. And then last but not least, I mentioned some of the pot stocks recently, some of the ones I'm watching. This one's more speculative. It's a smaller, low price penny stock, TGODF, the Green Organic Dutchman Holdings. But you have this downtrend line, positive divergence, bullish falling wedge. Typically the smaller they are, if the sector gets some traction, the more they run. This would be my first target right there. That's 11.2 right there. That's 0.1123 is what the line says. Maybe a little bit below that. Then you have another shelf of resistance right here. There was a support shelf and resistance level. And then if this thing really gets some traction right now, these are all old lines from trading it before. I've been trading this thing for years. Right there, max target about 15.8, so just shy of the 16 cent level. And the other ones are a little more solid companies, so to speak. Of course, it's still the cannabis industry, but this one, all these were highlighted recently. CGC, Canopy Growth. You had most of these positive divergence forming on the daily chart. That's what we're looking at here. You had a nice falling wedge pattern, bullish falling wedge. You had a breakout candle recently right there. And this one was highlighted as that was the entry. We took it, and so far it's up since the breakout. It rallied, and it's still up about 15%. It went on to take out that first target, hit and take it out, 676, and now it's back testing. So this is an objective entry. Support once broke, resistance once broken becomes support. So if you missed the breakout or you took the breakout and you're looking to add to it, this is an objective level to add with a stop not too far below that 676 level. For a run up to the next, and current final target at 943. Should that be hit, you're talking a total gain on the trade of about 52%. Next one is HEXO, Hexo Corp. Can't really draw a great downtrend line. Maybe this might do the trick right here, but you're coming off a divergent low like the rest of the lot. And I'm going to move this line. That looks like an order. I'm going to move it up to that reaction high. Say that should be your next stop right there, 73. Also low price stock. Keep that in mind. It's a drug manufacturer, specialty and generic. It's in that realm of cannabis stocks. Or they'd have something cannabinoid related, some kind of drug they're working on. MJ is the ETF, and this is the sector ETF, so it shows you this sector broke out of a bullish falling wedge with positive divergence. And again, that was also highlighted as a trade idea. I said if you didn't want to mess with the individual ones, just take this one, take it on breakout of the wedge, and that one's good for so far. It keeps going, about 11% gain so far. We hit and took out my first target, 963, and right now I'm looking at 1095 as the current final target at this time. So should that be hit, you're talking about another 11% to go. OGI, this one's ready to pop. So this is a setup, poised to break out on any more upside. There's a nice clean bullish falling wedge pattern. 151 is also resistance. It's a hair above that now, but the trend line is what I call the BOD, or benefit of the doubt line. You have two resistance levels in close proximity. I wait till the latter of the two is taken out, and that would be the trend line. First target 172. Need to really give you a second target, and let's say it's going to be right about here. I can see I had a level here. That would be my max target now. Let me color it up. I know this chart looks like a Christmas tree. Let's make that line yellow. 218 would be the max. But even a quick pop up to 172 is going to get you, and you'll probably get a reaction if we get there, about 11%. So that's what we're looking at upside here on the cannabis stocks if they follow through on these those that have broken out. And it's going to help to see those that haven't broken out yet, like TLRY. TLRY has some work to be done, but same thing, positive divergence, but the trend line, there's a primary trend line, it's a little bit above, but the target on that one is 736. Now, the way I view this, I like to take, I've always said this for many, many years in this sector, a shotgun approach. I'm going over just my favorites. I only have two more, and that includes the ETF. So you either do the ETF, which you own up all of these. These are components in the MJ, the one individual stocks that I'm covering, or you take a basket of those individuals, and you will almost always, in just about any case, outperform. That's what I've done when I go over the sector. I look at the most bullish ones and ignore the most bearish, and then you'll usually outperform. But to do that, I like to take a shotgun approach because you never know which ones will pan out. Now, where I was going with that is if 80% of these that I highlighted break out, and the ETF, the sector ETF is broken out, this one's going to almost certainly follow suit. Birds of a feather flock together, and these guys tend to move together. So you can take TLRY. I think if you do that shotgun approach. And let's say you're layering into this sector, you could take it here in anticipation of a breakout and a run up to that target there, and that would be about a 33% gain from where we're at. 736 again is that target. Last two, CRON, Kronos group, and that one has broken out, and that's why I'm doing this update. This is a follow-up. You know, if I cover a sector and it's a setup, waiting for a breakout, you know, or with bullish developments, let's say, but they never pan out, I may or may not follow up on that sector. I will follow up if they start to break out and they trigger objective entries, and that's what I'm seeing here. One after another has broken out since that video a week ago. Previous reaction high there, reaction 356. So we took out the trend line and price resistance, and my minimum and first and really only target right now is that $4 level, 407. So that still gives you, you know, if it's hit, assuming it's hit, that's still another 9.5% gain. Last but not least, ACB, crowd favorite in the sector, at least one of mine. And there's a downtrend line quite a bit up there, but I'm going to give you the target now in case I didn't. I don't think I did last time, or it would be here. I'd say this one's probably going to run up here. Let me see if it's going to move in relative sync with the rest of the group. That's going to be a 26% run. I'm going to give you a couple levels I can see now here. I have a reaction low there, and it's minor resistance, and we're close to it now, the trend line, but I think we'd probably push up here. I'm just going to give you the resistance levels. Max target 536. That's a pretty aggressive target. This one here, I would say probably come up to about the 465 level, maybe a little shy of that. Yeah, 455 to 465. That would be my first and preferred swing target, which again is a little bit more aggressive than, or a bigger gain than some of the others. But this one, again, is more of an established company. And again, it's all about momentum traders. When they flock into these, the momentum traders get in, they get out. And it's like trading treasury bonds or anything else right now. That the longer term outlook is not profitable or bullish, I should say. But I'll go in there, hit and run, tactical trades, in and out, long, short. And all right, let's wrap it up here. I will follow up soon. Gold, silver, just kind of consolidating, doing their thing. So I haven't done many updates there. I still am longer term bullish on those. And I will include them in an update soon. And that's about it. That's all I can think of right now. Those are the ones I wanted to get out to you today. So let's see what happens there. Like I said, I think the NASDAQ 100, I told you I'd loop around back at the end of the video. This is the futures right there. Let me look at the QQQ. Now we have that 60-minute divergent high, and also just kissed that. There was my 356.70 resistance. The high of the day was, since I started the video, 356.52, close enough for government work, and nice divergence. So I think we shall now, and it's also, remember I had that trend line there. I think it's also a back test. Yeah, it is. That is nice. Back test, trend line, back test of the trend line, that is. What board? There it is. That's the board I had on. That's how I had the trend line before. But you could also put one like this right there. Come in and capture this low right there, or a good part of it, and say it's a back test. It's not the cleanest one, but more importantly to me, it's a rally, a pretty strong and overbought rally. All the indicators are overbought into resistance with negative divergence, and so right now I think it's worth a shot at a short on QQQ, and also RTY or IWM scaling back into what could prove to be another very nice swing short or trend short entry. All right, guys, I'll wrap it up here, get it out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.